Hi, I'm here at the ISDA AGM studio in Boston, and I'm joined by Joana Schlenczek, ISDA board member, head of FI rate structuring and client solutions, Santander Corporate Investment Banking, and Nate Wuerffel, global head of market structure and head of product, global collateral, BNY. Joana, derivatives and SFT markets are becoming increasingly interlinked, particularly through margin and collateral needs. Are derivative markets changing the demand for SFTs, and how are you seeing that play out in the markets?
Yes, absolutely. So I think already when we just look at purely at repo markets, they already have a significant market linkage. So the repo market and the demand for repos already depends on, market risk factors such as rates, equity, FX. And people use them already to steer their liquidity, and that liquidity goes up and down as markets move. Now, when we put derivatives on top of that, we have a lot of, new rules, which are variation margin, initial margin, mandatory clearing. So they introduce additional liquidity needs and changing liquidity needs based on the mark to market of those derivatives. So the issue that we now face, or I think the challenge that we face, the complexity is that we now need to anticipate as institutions how much liquidity we need when we have a significant rate hike or when FX markets move. And I think that is really changing, how deep we need repo markets to be. Because what we need repo markets to do is to absorb that additional liquidity in times of needs when market risk factors change. And that, that joint up, I think, functioning is what we need, to support, I guess, all these additional requirements for derivatives.
Nate, a clearing mandate for cash US Treasury transactions will come into force from December 31st, with repos following 6 months later. What are the remaining milestones, and do you think the mandate will have any impact on market liquidity?
Yeah, the Treasury market's the most important sovereign bond market in the world, so it's really important to get this right. I would say there's a couple key milestones here. One is that the official sector, the SEC, is really working to clarify some aspects of the rule around inter-affiliate transactions and transactions across the globe. And I think some clarity around that will be very important. The second thing is really for industry participants to make sure that they're ready. And that involves not just the operational mechanics of clearing, but the legal and the documentation that needs to be completed. And so we've really been encouraging clients to get that underway now, because you don't want to be at the end of a long line of market participants trying to clear their transactions. At the end of the day, we want a safe and a liquid Treasury market. That's its foundational principles. And I do think that clearing can help with that. Safety attracts capital, and we should have a more liquid market in the end.